Good morning, everybody. Welcome to the Alternative Finance panel discussion today. I'm Chris Vartzis, partner at Stephenson Harwood, Athens, and head of the Maritime Finance team in Greece. I'm not sure that whether the term alternative characterizes what we're going to discuss today, taking into consideration that alternative capital is now a core part of shipping finance. However, the objective of today's discussion with my panelists is to establish 5 main topics. First of all, how the term sheets are changing in terms of pricing, leverage, and structure. What makes deals happen in real life and what stops them, where the money is going and what gets funded this year, what each platform does best, i.e. the edge of each platform which is being represented on this panel, and last but not least, how geopolitics and sanctions show up in credit terms and documentation. I would like to allow each one of my panelists to present themselves, and then we shall commence with the first topic to be covered. Nicholas.
Hello, everyone. I'm Nicholas Petrakakos. I'm partner and managing director at Alantra. We're an investment bank that is focusing, among others, on the maritime and offshore industry. And the markets we cover, of course, are globally, but with a strong focus on the Greek market, the German market, and the Middle East.
Hello, everyone. Kalimera, and thank you for organizing this panel. My name is Eahan, Executive Director in Bank of China Financial Leasing. And for brief introduction, Bank of China Financial Leasing, or BOC Leasing in short, is the sole ship leasing arm under the Bank of China Group. And unlike Bank of China, which was established over 114 years ago and a pioneer in global shipping finance community, BOC Leasing is one of the youngest leasing houses in China. We only engaged into the ship leasing business after 2023. However, we are very active and motivated into expanding our shipping portfolio. And after merely 2 years development, currently our shipping asset consists of over 60 vessels with coverage of all main types of merchant ships, bulker, tanker, container ship, and gas, and also specialized vessels like cruise ships and offshore vessels. And we are cooperating with clients from both domestic and abroad. As a matter of fact, almost 1/3 of our fleet nowadays are built up with Greek shipping companies, and Greece is considered to be our prioritized and strategic area for future expansion. Yeah, thank you.
Thank you very much, Ian. George.
Yes, George Fikaris, Managing Director with EnTrust Global. We've been investing in the maritime space for the last 9 years and have invested almost $7 billion across all maritime sectors. When we started, Greece was by far our biggest base. I think about 80% of our portfolio was here. That percentage has come down as we've grown in other parts of the world. We now have a team in Amsterdam, a team in Oslo, but we still cover Greece, and it is still our biggest exposure in the portfolio. I think what separates EnTrust from some of the other participants is that we raise our capital and have fully committed capital from hundreds of LP investors, which are not shipping experts. So when they give us their money, they entrust us to invest it and believe in what we will do with it. We've built a track record now to where we're able to fundraise and deploy on a consistent basis over billions of dollars per annum. And right now, we are investing all across the capitalization table. We started off mostly as senior secured debt, but a lot of what we've done has also been on the second lien, equity, et cetera. So from our viewpoint, what separates us or what's special about us is that we come to Greece knowing the market here, but we're coming with institutional capital from the Americas and Europe who don't know the industry, but are giving a lot of money for us to invest it. So I think that's what's important for the ship owners here to understand, is that when you're talking to us, it's not like it's a bank's balance sheet that we're lending to. We're raising capital from large insurance companies who are putting together big tickets. So we focus on larger transactions now.
Thank you very much, George. Sakis?
Hi, I'm Sakis Voudris. I'm a director at Neptune Maritime Leasing. Neptune was established back in 2021 as a fast-growing leasing company, agnostic on assets. We can finance any types of ships and ages, like dry bulk carriers, tankers, container ships, gas carriers, offshore vessels. We have a dedicated team of shipping experts here in Europe, in Asia, and we are covering all clients globally. For the last 5 years, we have managed to grow our book close to $1 billion in leases and also more than 65 vessels, and we're very happy about it.
Thank you very much, Sakis. Let's move on to the terms of the 2026 term sheet, and I would like to extend the first question to Nicolas, sitting next to me. Compared with 12 to 18 months ago, what moved first in term sheet? Pricing, leverage, structure, and what are owners more surprised by when they see today's first draft of a term sheet?
In the context of alternative finance, the major surprise is that is the banking side of the business. So you see a lot of competition with banks nowadays that comes hand in hand with the liquidity that exists in the sector. And what we've seen, and we're in a good position to be seeing a lot of deals and term sheets going back and forth, is a shift on both the banking side, the leasing side, but also the alternative finance to more alternative sort of investments in the sense of higher risk parts of the industry or even new parts of the industry. One characteristic is, of course, the offshore side of shipping, a part of the industry that was almost forgotten and now is maybe the most exciting for most of the alternative finance providers. On the conventional side of things, of course, there is participation from alternative financing. What we've seen changing is a little bit the LTV has gone a bit higher than it could otherwise be. So we see a shift from alternative financiers to be more cyclical instead of counter-cyclical that they used to be. I used to say that the alternative finance is really the no alternative finance. If you have no alternative, you can go to this type of capital. Now it's really part of the capital structure, the solutions that any balance sheet can employ, from public companies with big balances, private ship owners with big balances. There is always room for alternative finance to come in. The solutions that are provided, especially on the leasing side, can provide higher LTV at very competitive rates, and that has to do also with how these providers have evolved. They have become more established themselves. They have managed to have back leverage providers for them, which part of the savings is passed on to the ship owners. So I would say both the LTV has increased and the margins have become more competitive, but also tenors have been extended and profiles as well, which shows also that the industry is facing an issue with the fleet needs to be renewed. Until that happens, the existing ships will be employed for longer, will work for longer, and that is reflected on the financing structures.
Thank you very much, Nicola. Sakis, from a leasing platform perspective, where is the negotiation really happening now? Cash flow flexibility, credit protections, and what is the one point you need agreed up front to keep the deal deliverable?
I think the center of gravity negotiation has shifted in the last 18 months. We've seen tremendous abundance of liquidity among lenders, very strong markets, and which have helped, obviously, the ship owners. And that has brought the negotiations around pricing and cash flow flexibility in a way. I think we've seen the debt conditions are in favor for the owners today. We have plenty of, I would say, loan availability. We have low interest margins. We have looser repayments and also, longer profiles. I think lenders are competing with each other, and in that sphere, I would say, the owners are pushing harder and harder for lower pricing, and of course, all the financiers are, trying to underwrite transactions at lower remunerations. But Just an example, only the last, I would say, 12 to 18 months, we've seen margins dropping by at least 50 to 100 basis points across all owners, small to bigger ones. I think the biggest drop has been seen in the smaller owner side. Another thing is that the very high asset values and the rates have also helped a lot the clients, coupled with the geopolitical tensions like tariffs, environmental regulations, changes in the sea trades. The clients are trying to take advantage of this cautiously, I would say, and they want this cash flow visibility and flexibility in a way. I think we're here as Neptune, we're here to offer them all kinds of solutions. We can do pre-delivery, post-delivery for all types of ships and vessels. We can be very accommodative on repayments and stretching the profiles. We can be competitive on pricing and also very quick and fast on our approvals and execution.
Thank you, Sakis. That's very promising. George, would you be so kind to give us your perspective?
Yeah, just looking at it somewhat differently from a different angle, you're seeing more leverage. I mean, for those who lived through the pre-2008 time period, leverage upon leverage upon leverage, there was this leverage you didn't even know existed until the markets pulled back, and then you realized who was exposed. Not to say we're there right now, but you're seeing signs of that. So from a big picture perspective, you have to participate in leverage to get interesting returns today. So it's not like we're avoiding it ourselves, but you have to be more selective on who you're working with if you're going to utilize leverage to help your returns. So when we started, we were focused pretty much on the whole universe of ship owners because of the counter-cyclicality, the entry point there. But now, when you're at the top half of a cycle, you want to work with the stronger balance sheets or with contracted cash flows to get yourself comfortable. So that's been a shift more on target. And one other important point, you looked at it, there was a news release a few months ago, Hudson Structured in the States, and our fund as well, has gotten ratings from Moody's agency to rate the fund, which was something you wouldn't have expected even 3 years ago. But now you're getting some of the bigger names on the rating agency side rating these vehicles that are investing in shipping and in loan assets. So something that's new, and that tends to attract more capital that needs that rating agency to check their box. So it doesn't sound like money is there's going to be more money coming, let's put it that way.
Thank you very much, George. Let's move on where the money is, what actually gets funded in 2026. Eahan, where is leasing and sale and leaseback adding most value in 2026? What's your view? Refinancings, acquisitions, new building projects? And what are the key yes factors for you when you look into a prospective deal?
I think in a priority order, I would say it's new building, acquisition, and refinancing, along with other interesting and innovative structure deals, I would say.
Sakis, beyond pricing, what do owners most want from a leasing platform? And what makes a sponsor repeatable for you?
Look, as Neptune, we are one of the fastest providers of capital to the industry. Only last year, we have been able to close an execute transaction in less than 15 days. That means that from the day we've been approached by a client to look at a vessel, to finance a vessel, until the moment we've dispersed the funds. That's because we have been able to build a very dedicated and experienced teams of people spread all over the world that can assess quickly and provide turnaround, let's say, the deals and provide indicative terms within only, I would say, a couple of days, and then move quickly to our approval process and our funding mechanism. I think owners have learned over the years that the importance of being reliable, quick, and trustworthy in this market. I mean, it makes a lot of sense to pay a slightly higher pricing, but be able to get your funding as is without any hiccups through our credit committee or lengthy documentation process. And that's why we're fully committed as a team and as a company to be able to turn around, term sheets into execution very quickly.
Thank you very much, Sakis. George, what types of transactions are you more focused on in 2026? And what are the key drives that make you lean in?
Look, I think it's been addressed already that the smaller market players are also, smaller borrowers, smaller ship owners are also being well covered, especially here in the Greek market. So we're going where there's less competition. I think corporate M&A, large fleet acquisitions where the numbers are $100 to $1 billion plus in size, and because it's M&A, there's sensitivities about being able to deliver and somebody could underwrite the full amount. That's where we've been able to separate ourselves the last few years. So it's been more on the larger transaction sizes. And then to fill the gap on the other side of it, contracted cash flows. LNG carriers are getting 10-year plus contracts with investment grade counterparts. So where can we fit in that capitalization? We've done it with some partners in Norway and hoping to grow that with some partners in Greece now.
Thank you very much, George. Nicholas, across the market in 2026, what solutions are owners using most? And are we seeing more blended structures and strategies in practice from ship owners?
In the part of the market that we operate most, at least in the last year and a half, which is offshore, especially in the Middle East, we've seen mostly leasing structures being employed. That has to do with the culture of the area, but also the requirements. I think both leasing and mortgage financing will remain the primary structures. And we see more the European banks, including the Greek ones, coming back to finance, especially the part that needs renewal in the fleet, new buildings, younger ships, etc. We see less refinancings in the last 6 months to 12 months. It's mostly acquisition financing and new building finance. In terms of structures, there has been some shift and some renewed interest on the equity side of things. And as George said, there are solutions now on the junior piece, on mezzanine piece, or preferred equity piece, if you will. We also see quite a bit of interest now from infrastructure funds to enter the shipping industry again, but more from a credit perspective with long-term cash flows. Probably the LNG sector, the VLGC sector is something that would be relevant in that discussion. But what we continue also seeing is the complete lack of access to the public markets. It's maybe 1 or 2 deals a year that are happening, which shows that still our part of the industry, the shipping industry at large, is still not in the center of a discussion. Even the largest public companies are micro-cap from a public market perspective, so we have quite a bit of room there. So private capital, both on the equity side and the credit side, will remain the primary alternative in our view, and the structures will evolve alongside the conditions of the market. So what I think is the answer to cyclical investment in shipping has to do with structuring, and what we described as expensive assets these days can be mitigated on the credit side with structuring around quicker repayments, faster amortization, profit shares, and the like.
Thank you, Nicholas. I think George has addressed that briefly in his introduction, but now I would like to turn to the competitive edge in today's market for each one of you, from the perspective of your platform. Eahan, would you be so kind to give us your insight in respect of your institution's competitive edge?
Yeah, thank you. I think as a joke, the biggest advantage for us lies in our company name, because people ask which Bank of China, we say the Bank of China. There's no adjectives in between, and it's catchy and good branding. In fact, Bank of China is the most globalized integrated bank in China, and the first shipping finance transaction in China was concluded by Bank of China back in the 1960s. So being the sole ship leasing arm under the group has given us not only the genes to conduct ship leasing transactions alongside with the market fluctuations, but also with many distinguished advantages. And lastly, I think because our company itself is young And ship leasing is considered to be the strategic sector for our company's future development. So the internal resources are guaranteed, and the company structure is flat managed, less bureaucracy, and no historic burden to impede sustainable development. So yes, we think we are confident that we are able to outperform the others in terms of pricing, efficiency, flexibility, and the overall dedication to shipping. Yeah.
Thank you very much, Eahan. Sakis?
I think our clients view Neptune as reliable partners to provide the capital they need to grow in this, interesting, fascinating, and exciting time. We are fast, we're flexible, we're able to finance all sorts of ships and ages. We can do front-loaded, back-loaded repayment profiles. We're very competitive on the pricing. We're very fast. And I think to your point earlier, we have, I would say, more than 90% of our clients are repeat clients. They started with one vessel and, 2-3 years ago, and now we finance for them vessel number 9 or vessel number 10. We like these types of clients. They're reliable clients. They see in us reliability as well and flexibility. And the other most important factor and element is our team, a very strong team that has a very long track record and experience. They understand the needs of the clients. They know their history, and they can speak to them directly. And that's very important.
Thank you, Sakis. Nicholas?
Compared to the rest of the panel, we're not providers of capital. We're advisors for our clients. I would say our competitive advantages are presence in 25 countries around the world. Alantra has a very large network of offices around the world. We are covering about 100 names in ship finance. It might sound a large number, but that's around the number that does exist in investment shipping. Of course, not all projects are for all financiers and the other way around. Our work is that of a translator to a certain extent. The language of finance and language of shipping sounds the same. It's not. We try to take the edge out of these discussions. And we work very closely with the people on this panel and those that are not here. And we, in a sense, create a market. And when there is a market, usually the benefit goes to the ship owner that is seeking finance. We can assist, of course, with structuring, with sourcing, financing, and more importantly, we stay around after the deal is done, because it doesn't end with signing a term sheet or a financing agreement. There is a 5 to 10 year relationship. As Sakis said, sometimes you continue growing it, and it's very little chance that this relation won't have hiccups, and we're there to take the bumps out of the road.
Thank you very much, Nicholas. And George, would you like to recap?
Yeah, I think importantly, we are a team that has diversification in-house, commercial bankers, investment bankers, ship operators, and previous owners, and lawyers that worked on many complicated transactions, especially going through the tough times in the teens. And we are able to invest everywhere in the capitalization table, and that's a very important thing. If you have an interesting idea, we are not just come to us for debt or just equity. You could come to us with an idea, and then we could work together to find what's best.
Thank you very much, George. The next topic, I'm quite conscious about the time. We have 7 minutes. Geopolitical and sanctions risks. I would like to get the perspective of each one of you on this topic, how you approach that, and what changes first for you in light of these risks. Sakis?
Look, we think that geopolitics brings a lot of opportunity for owners and for capital providers. And we've seen that in the last couple of years consistently. We've seen, like back in 2023, when we had the softer markets for dry bulk, or early last year, the beginning of 2025. Our approach, certainly in this situation, is that we want to be a lot more aggressive. And this is when we have concluded, I would say, the vast majority of our transactions, especially in the dry market. We've done the same in the offshore space when we entered the market 3-4 years ago, and we've built a nice book of a nice portfolio. I think owners are now trying to take advantage of these opportunities that exist because of the geopolitics. They're also very cautious about the the tariffs and the tensions that the changes in the sea trades will bring. But on the other hand, they invest, they partner up with capital providers like ourselves. They see us as partners, actually. And I think there's a great collaboration.
Eahan?
Yeah, I think under the current market condition and the geopolitical uncertainties featured by sanctions, tariffs, and regional complex, this whole compliance or KYC becomes increasingly important for us. The compliance check is it's a baseline, and we do have a system to facilitate that process. But the KYC, I believe, is more subjective, so to speak. I think the standard has been raised for us marketing people to match the client's need with the internal policy and also the shipping finance market condition. And I think we will walk through the whole process, the timeline, the request with our clients in advance in order to address their concerns and to manage their expectations. And one thing I would like to add to that is that we think leasing or Chinese leasing solution is based on the combination of the creditworthiness of both the charterers and the vessel. So we'll take a comprehensive view of both. For example, BOC leasing, we do have a transaction with big names, but also with medium to small size ship owners whose vessels are of high liquidity and reasonably leveraged. So those factors like pricing, responsiveness, flexibility, and the bigger ticket size for one single transaction are enticing the ship owners to work with us. So yeah, I think it's a kind of process of cooperation along the way, despite the risks we face.
Thank you very much, Eahan. Nicholas, what's your perspective?
Sanctions and geopolitics are one of these topics that there is this language difference we discussed. When banks see changes in geopolitics and sanctions, they see risk. When ship owners see this stuff, they see opportunity. Of course, there is more volatility coming into the market, which usually might benefit the equity side of things, but that tends to think in a different manner. When this whole situation with sanctions, especially with Russia-Ukraine war started, it was a very soft approach from a lot of ship owners on what sanction is, how gray the area is, and how to avoid being entangled in it, but at the same time make the most out of it. I think 3 years later, today we're almost 4 years, that discussion has tightened a lot. So sanctions is something that has found its way into terms, it has found its way into facility agreements, and it's something that is monitored very closely. On the other side, it has also forced people to look at opportunities on the non-gray area, on the normal trade area, which remains very interesting with President Trump's blessings will continue being interesting and changing every week. So it will continue to be like this. It will give more and more interest in the industry, more volatility in the industry. And it's interesting that, you know, in the past 7 years, we keep saying about black swans of shipping. It hasn't been a single month without the black swan. So I think it's a black swan industry at this stage. Yes. So and I think it will remain like this.
George?
Yeah, echoing everybody else's comments here, but to add, ultimately it's been an operational exercise and working a lot more with lawyers than we hope to sometimes on all these changes that come, and you never know what headline will come out every day. But I guess if opportunity is the key word, but also if you want to look at risks, you know, there's a situation right now between the U.S. and Iran and the Strait of Hormuz. That is obviously, I think, would be a major story this year if something escalates there, which is obviously nobody wants to deal with that. But otherwise, it's been more opportunistic for everyone.
Thank you very much, everybody. And let's try to be practical on this panel. Our time is almost up. Can I have one practical piece of advice to a Greek ship owner? I can see quite a lot of ship owners in the audience. Could I have a practical piece of advice for them for 2026? Sorry, can we start with Sakis, please? From your perspective.
I think from our perspective, I would highly encourage them to work with leasing companies like ours that have the credibility, the capital, the flexibility, and the team to deliver. And we're very happy to do business with them.
George?
Yeah. I think if it's a plain vanilla transaction, refinancing, or simple acquisition, just call your local Greek bank. They've been quite aggressive. They seem to be offering great terms. But if you're looking for something that's more larger, corporate M&A or large fleet acquisition, I think you talk to the people on this panel.
Eahan?
Yeah, I think Greek ship owners are well renowned for your capability and strategic foresight. And I think along the way that I think Greek ship owners, it's not advice, it's just a personal suggestion, is that you can secure the current level of margin and a strong bargaining position, and to be forward-looking in terms of geopolitical upheaval, and to diversify the risk financially, rather than just putting all eggs in one basket. Yeah, that's my advice.
Last but not least, Nicholas.
I would say keep doing what you've been doing so many years. It's, we're in a position now to be discussing in an environment of ample liquidity. A lot of ship owners are down grade. Now it's probably the best time to start working on banking a relationship when you don't need the money. So I think that the focus should be this year as well, renew fleets and invest in future-proofing technology, future-proofing fleet, because this industry is not important just for the ship owners themselves, but for the country that we're in, and it's a pillar for economic growth. So our hope and suggestion is continue doing what you've been doing in the bad years, also now in the good years, and just expand and grow. That's it.
Thank you very much, Nicholas. That concludes our panel discussion today. I would like to extend thanks to my panelists, Capital Link team, and you, the audience. Thank you very much indeed.